One highlight yesterday, Federal Reserve Chairman, Vice Chairman Richard Clarida saying yesterday that he thinks rates could go up in 2023. The central bank may also announce a reduction of its asset purchase program later this year. Most market participants are expecting an interest rate hike in 2023, but the Fed has said it's going to be into 2024. So this is the first time we're hearing an actually Fed official say it's going to be 2023. Joining me right now is Villar and Company portfolio manager Sandy Villar, also joining the conversation all morning long this morning, the Wall Street Journal senior writer John Hilsenrath and the Hill columnist and Fox News contributor Joe Concha. Great to see everybody this morning. Thank you so much for being here. Sandy, kicking it off with you. Let me get your take on the Fed and when rates start moving. I find it a real head scratcher to know that the Federal Reserve is signaling one thing and the 10-year continues to show these incredible moves, hitting 1.16% yesterday. What's going on with interest rates and where do you think they're going, Sandy?
Yeah, I mean, I think interest rates ultimately go higher, but yeah, the bond market's all, very much smarter than the stock market, and so to hit 1.13%, that's telling you everything you need to know. Growth is going to be slower. We're going to get job numbers out tomorrow, and my assumption is while they continue to grind higher and ultimately, probably will do that, it's going to be tough sledding, and I think with the rates where they are, it's a tough spot for us all to be in.
So it's great. You just pointed to my whole point. I mean, the Treasury now at 1.18%. Is this telling us that growth is slowing down in the future, Sandy, that we've already seen peak growth? Is that what the bond market is telling us?
It really is. And, we got all sorts of factors, but certainly, the biggest one being all this government intervention. And so, whether or not the Fed raises by, 2023 or, Bullard came out and said it of 2022. But the reality is, we're going to start to taper here by the end of the year. And I think that's going to, have a pretty big influence. And so to some extent, bad news could be good news. If you see, tough job numbers as Delta variant cases pop up over the summer, very tough months for the market, and certainly August and September being the worst month for the market. We're going to be standing by, but bad news could be good news to keep that government stimulus going.
Yeah, no, we've got some economic data out today and tomorrow, and that's going to give us more of a window into where we are in the economy and the jobs market. So we've got weekly jobless claims out this morning at 8:30, and then the July jobs report out tomorrow morning. We're expected to see 870,000 new jobs added to the economy in the month of July, with the unemployment rate expected to move to 5.7%. That would be lower than where we are. What are you expecting from the July jobs report? And tell me, Sandy, how you see this economic data and the state of the macro story affecting how you allocate capital.
Yeah, so we saw, 850,000 jobs added in June, and maybe we'll get closer to that 870 number, coming up tomorrow. It is a little bit, kind of mind-boggling as to where we go from that perspective. But I think that again, if you see a slip in jobs, and where more and more people are getting vaccinated and coming back, and we're going to see people that aren't coming back to work to some extent. Maybe as we get into the school year starting, and they can send their kids to school and start to get back into the workforce. But until we get through these summer doldrums, I don't see, much positives for the stock market. And, to some extent, if we do see rates come down and you see things like, large cap technology get a tailwind, I'm going to use that strength to sell large cap tech and look to buy things, be a little bit contrarian, things like financials and maybe consumer discretionary. I want to be involved in the, kind of the reopening of the economy plays, but I want to buy them in the lows and hopefully September, and look for a strong end of 2021.
So use strength to sell into technology and use that cash to buy financials and other value names. Do you like J.P. Morgan? Because I spoke with Jamie Dimon this week, and, one issue that I asked him about was the stimulus money getting thrown at this economy. Is that what is standing in the way for loan growth? I mean, look, as I do, that these major banks are finding themselves in a liquidity trap because all of this money is being thrown at the economy, and they are just flush with cash. And then nowhere to put it. Here's what he said about liquidity when I spoke with Jamie Dimon earlier this week. Take a listen.
I think the good news, which is far more important than all, is that we have a healthy underlying economy. The data is uncertain, but the strength of the economy, in my view, is not. And a lot of this liquidity has putting the consumer and businesses in a position where the pump is primed. It's ready to go. So the fact that loans are coming down in this, unlike 08 and 09, this is a good sign. Everyone's ready to go. Confidence is going up. People have plenty of capital.
Sandy, do you see it that way? The fact that the savings rate is up, that people are primed, at some point they will unleash that and then we'll see growth numbers pick up? What do you think?
Yeah, I do. The consumer has never been healthier, and that is a very positive thing. And so I do believe that if you see rates down kind of where they are and you see money center banks like a JP Morgan sell off because they're going to struggle to make any sort of net interest margin, now's the time where you want to buy into that weakness. And maybe things trickle down a little bit lower as the Delta variant peaks and you get an opportunity to buy, financials in general at lower valuations really over the summer. I think it's setting up for a very nice end of 2021. So I would take advantage. And yeah, the consumer's healthy, great second quarter earnings, 90% of the companies beat numbers. I'm pretty excited for the end of the year, but I want to save some powder and buy over these weak summer months that I think that we're basically in store for.
Well, do you think policy is going to run into some of the bullishness out there? Don't forget, Joe Biden wants to jam through tax increases and spending plans, taking the capital gains tax all the way up to 43.4%.
Yeah, there's a lot. When you look at what's going to go on with even raising taxes on corporations, maybe it won't be as bad as 28, maybe it'll be 25, something like that. But yeah, there's definitely some policy. I talk to my clients all the time about trying to figure out, do we take gains in 2021 to look forward to next year when rates are so much higher. So I think people are going to be doing some things to try to figure out the uncertainty of what's going to happen with policy going forward and whether or not that gets through. So yeah, interesting times. A lot of cross currents.
Yeah, but you said it. You're going to use a sell-off as an opportunity to buy things like financials, among others. Sandy, it's great to see you. Please come back soon. Love having you this morning.
Thanks, Maria. Appreciate you having me.